Hi everybody, this is Gary Dean with Sentiment Timing, and this is our free technical video report for Tuesday, May 7th, 2019. We have a lot to go over, so let's get started with things. We saw the S&P get absolutely walloped. It's something we've been warning about, where even some of the dates and sentiment were ignored. Something that we preach to members and even oftentimes in our free reports is the predictive analytics model may be wrong and things could stretch out, but it's typically towards the very end of the move. And when things reverse, they reverse really, really fast to the downside. And we saw a 100-point drop in a matter of 2 days. And this is after we had a 97% bullish reading on Friday, where everybody was looking at the sky is blue and clear as can be, just come out and play. But nobody knew that the dark clouds were looming right behind it. And for the most part, we had everybody jump in at the exact top, just like everybody jumps in at the it gets out at the exact lows. And it's something that is going to repeat over and over again. So time wise, believe it or not, we're still in a neutral bullish time period. What's going to follow is what you're looking at today. When we head into the kill zone, you're going to see a series of days like today, and it's not going to find a bottom, and we're not going to see dip buyers buying at moving averages and stuff like that. They're going to take any bounce to look to sell, and it will continue until we see a series of extreme bearish sentiment readings, and that will mark the low, and from there we'll head back up again. But sentiment's been at extremes, which I will show you, and technicals have been warning about this for quite some time. But one thing with technicals is anybody that uses them by themselves, is same with sentiment or just time, you're going to get walloped. And things extend, wave structures extend, and but the thing is that when we're at the tail end of the move, there's certain signals that are pointing to things, and even if they get ignored, they usually don't get ignored for that long. So short-term bearish, actually it's probably neutral right now, neutral to bearish. Intermediate term neutral to bullish, and long-term is bearish. We're not looking for a real low that's going to be extended, meaning that we'll take out the highs and continue up until 2022. Now, the piece that's really should make everybody nervous is not in the not too distant future. Bearish, 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 and the last time we saw that happen, you can go look back in October 2018, and it was just one of the best trade setups that we had. We picked almost the exact top, and we picked almost the exact bottom. Things are definitely tougher when you're looking for some type of top, whether it be on a short term or even an intermediate term, because something that it's again, I preach to members, are the bulls aren't going to leave the party until they're forced out. Today, some of them are forced out, and some of them are going to let's say give up when we're about to make a bottom. And I'm saying a bottom because we're not at the intermediate term time period that's going to make us all bearish. That's going to make all our current trend model bearish, bearish, bearish. So where we are right now, intermediate term, we're probably right in this area here. Short term, we were here. Now short term, we're probably in a little bit of anxiety or denial. If we see a little bit more downside, we're going to have short term really panic and capitulation, and that's going to make the short-term bottom. So just to recap on what's been said, you can see everybody's bullish at the top, and we're really just going sideways, and that's what lures everybody in, and they're all in at the top, and then the floor gets pulled out and they head down. But what he has said, and it's, this is from last week on it, is that investors have become hypnotized by this friendly market. The pain trade has been higher, and a halo phase may continue. But we've also, he was saying that meanwhile, the dominant timing factor has been an interim trend, which is still up as expected. Again, that's the intermediate term that we're saying we're still neutral to bullish. But it also infers that the once the trend is reversed, it may also be momentous on the downside. Now, this is the part that's important: is that we have the next ideal sell zone. We know this date, and that's why I believe that this drop that we saw today is going to find a low, with whether it be in the next few days or next week. I'll leave that up to the market to let me know, but it's going to find a low, and most likely it's going to come back up and test or even break the highs, and that is going to be as we head right into the kill zone. And you're going to see a couple extreme bearish sentiment readings. Then everybody that got washed out is not going to jump back into the market until we're back near the highs again, just like they always do. I don't know why history repeats itself. I don't know why traders insist on buying the highs and selling the lows, and a lot of it has to do with the media, because they're listening to people that really they're telling you what they want you to do, because they probably have that position and they need you to push it up or down. But in any case, everybody's going to get bullish again just as we head into the kill zone. And as I said, that one, you're not going to be able to see people buy dips. They're going to be selling rallies. And I wouldn't be surprised at all to see us testing those December lows, if not breaking them. But that's going to happen when the kill zone comes. So let's just recap on this part. And this is that I showed you this last week. This was a large bearish wedge. This has the pattern pointing all the way down at the 2700 range, and this was bearish wedge number 2 that had a target at the 2875. So let's take a look. Here's that target. It hit right there, went a little bit lower. This is the bull bear line. They did find support. I'm going to go over all of these charts in a little bit, but let's continue with this. So on a bigger term, on a longer term basis, one of the reasons why things were very dangerous for the bulls is this wave structure was very mature, and that's something we kept saying. It didn't mean that it couldn't grind higher. It just means that it's very dangerous and it's vulnerable for this type of move here, right here. And that's because we had 1, 2, 3, 4, and we are in the fifth wave. So let's take a look at the 60-minute chart here, and I'll show you. This has been, if you guys go back, and I'm not sure if you have the videos, but this was, this pattern that I had pointed out with the wedge was a move down. Either we're going to find support at 2860 and head back up, or we could bounce and come down and then find a low, but eventually we're coming back up to these levels. And from there, everybody, like I said, is going to get bullish once we get up in this area near the 2900, because they don't want to miss the move that they missed all over here. So they're going to jump in, and it's going to be right in the middle of the kill zone. So let's go over a couple other things that I want to show you. And these were the warning signs that were out there. And this is the stocks above their 50-day moving average. That was declining as the S&P is moving higher. Warning sign that we're at the tail end of the move. Let's take a look at the McClellan oscillator. That was diverging as the S&P was going up. This was the warning sign on that. And finally, I'm going to give you the reason why I don't believe that the top is in, or we're going to at least come up and test the highs. Or it's the NIAD, and you can see we don't have any bearish divergences. And this is what I'm anticipating is going to be up in this level here when we make that top. And this is what I expect afterwards, and that's going to be heading right into the kill zone. So I think that we could head all the way down to the somewhere into the 2810, 2722. I'm not banking or saying it's going to get there. What we need to watch is what happens in the next couple days. If we see bears step in at the 29.20 and take out these lows, then you look at 28.10, 27.22. From there, the rally comes back up and that heads into the kill zone. And like I said, everybody's going to be caught on the wrong side. We don't have any bullish divergences, but that's something that is not really needed in when the bulls are in control. So it doesn't mean that we have to go up and down again, even though that would make more sense. And I believe a 23%, 38% retracement would actually be healthy for the market for a nice move to the upside. So we're going to be able to trade both sides, but the important thing is just knowing when to expect that kill zone, because that really is going to be the easy money on the downside. And seeing 600 points taken out in a very, very fast manner. We just saw 100 almost taken out in 1, 2, 3 days on it, and it's something that I anticipate is going to happen again. So you can see the bulls stepped in at the 50-day moving average, typical spot right there. Again, what you need to watch, can they get above the 29.20? If they don't, we come back down. 28.10 and 27.22 are going to be the next targets. So right now, let's see what plays out. But if you think you know what's going on, I would say let's touch base in anywhere from 4 to 8 weeks, and let's see what is going on, because things are going to get turned upside down, and this is just a precursor of what we're going to see. And if you don't know when these dates are, you're going to be in some serious trouble if you're just buying dips, because it's going to be very similar to that October move. So with that, have a great night, and I'll talk to you guys next week.